Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so let's take a look at Intel, which looks like it closed on Wednesday, March 12th at a price of $20.68, being up 4.5% on the day. But what's really exciting is during the after hours yesterday, we saw this very big candle. This is on the 10-minute time frame going up over 11.5% right after the market closed. And so that just looks super strong. Hit a high of 23.50 in the after hours, and that is the high. We have maintained that level throughout the after hours and into the pre-market, currently trading at around $23.20, being up over 12% in the pre-market trading. And it does look like it has bumped into, it looks like the, 210 minute and 500 minute moving averages there based on the 10-minute time frames. That's the 21 and 50. We do have the 200 or 2000 minute moving average, I should say, below us, and that's currently at around 21. But even if we pull back to 21, that's still up very nice. So I am personally very excited about this. But let's see, looking at the daily, just looking at the moving averages currently, we are trading above 23, like I had said. And we do have the 21-day moving average there in that nice little salmon color there. That is at $22.83. So it looks like we're going to be gapping above the 50-day moving average, which is currently at 21.21, and gapping up to right around that 21-day moving average. If we can get up to around $24 a share, that would be the 200-day moving average, which is currently at $23.98, right around 24. So let's keep an eye on that. I might actually just put an alert there at, let's see, above $24. And I do have an alert there at 19.20 for the below, because that is a level, I was keeping an eye on. We did it just a couple days ago. So on the 11th, we hit a low of 19.29, nearly getting to that level. And I have to say, I do have a small position in Intel, which I believe is just 4 shares. So it's very small. I've been trading options in it. I do have one call, nothing too crazy, but I am excited actually to just take profits on that once the market opens. I'm sure it will probably rally higher, but just kind of want to take that risk off the table. But my average for those 4 shares is at 19.30. I did not buy this dip. Actually, I was, accumulating over here, and there was a level that I had marked at 19.20. It might have been a gap. Yeah, let's see over here. So on January 16th, we closed at a price of 19.67. So that was not the gap, but maybe there was, I think it might have just been like this consolidation. No, actually, I'm not sure. Let's see. What was the close on February 7th? 19.10. The day before, the close was 19.38. So yeah, I'm not really sure why I had 19.20 marked. It's a video that I'd gone over in the past, and it just stood out to me as being a level to consider. I do have some other levels over here. This 1886, that's a 786 that goes back pretty far in time. Actually, I have to switch over to the weekly to take a look at that. And let's see, I was looking at some stuff in the log axis, or the log y-axis. So let's actually switch over to that to look at this longer time frame. Yeah, that's just going to be a little bit wonky, but it was based on a low going back to, I think, 2023 and the high up here. And so the 786, if I do adjust this axis, I got to really... that goes back to the low from what would have been over here, going back to the 11th of September in 2009. So quite a far retracement going back there, going back far in time, and then up to the highs here from 2021. And let's just adjust this axis back to the linear scale. And so let's see, what are some levels that we might be going up to. I do have some doodles here. I'm just going to actually delete these arrows. Yeah, consider this Fibonacci retracement. It's based on the low from February. Actually, I'm on the weekly, so that's probably why my arrows were looking so wonky. So let's switch over to the daily, and yeah, maybe we can, those arrows might mean something on the daily here. So this is based on the lows from February 3rd going up to the high from February 18th. That's how I get this Fibonacci retracement. So I was looking for, basically a couple scenarios where, could be bouncing from the 50% retracement at 2316. That did not happen. We did not get this move up. So I'm going to delete that arrow. And then I was also thinking, well, maybe we find support at the 618 at $22 or so. Clearly, we broke through that. So that did not happen. We did not get this inverse head and shoulders pattern that I have doodle up there. So I'm just going to delete that as well. We just got this one big red candle going down over 6% on March 4th, and then coming down to this 50-day moving average before finding a little bit of support, but then going lower, breaking below the 786, which was at $20.66, closed right around there yesterday after gapping up. And so I might actually just mark that gap there. So the close from March 11th was at a price of $19.78. So I got that marked there. I'm just going to make it a dashed line and make that blue. So we do see that gap to the downside. But like I had said, we're currently trading above this 21-day moving average here, that salmon line there. And we are, looks like, also trading above this 50% retracement there, but might be bumping into some resistance around 24. So it will be very interesting to see. But if we do see a green candle with a continuation up, I think that we could be heading back to, let's see, maybe I want to throw up the volume profile here so we can kind of get an idea of where we might see some resistance. And so it does look like this volume shelf or volume node that we see here, high volume there, that is in the range from about $22 up to around $22.50. So we are trading above that. So that's looking pretty good. Do have all this consolidation over here corresponding to that, and I believe the point of control for the volume here based on this time frame is looks like it's at 22.35, so we are above there. The volume average high though for this time frame is 23.48. Like I said, we're trading right around that level, and so if I do take a step back, maybe we do start to see where this could be heading. We do have this gap up here at 28.87. I might actually remove that volume profile just because it doesn't seem as useful on this time frame. And so yeah, we do have that gap up there at 28.87, has yet to be filled, nearly got to it over here. And then we do have this white uptrend. I'm going to make that one a little bit thicker just because it stands out as being, very notable support over here that ended up being very notable resistance here when we hit that high on February 18th, which was at a price of $27.55. So yeah, do keep that in mind. And so I think that resistance, beginning with 24, that might extend up to around 26, maybe 27.50 with the high up here, also the highs over here. And so, yeah, do keep that in mind. We could be getting rejected from there. So if I were to doodle out what I think might happen with this, let's see, I would say that, we're going to be gapping up to around this level. I would think that we might be seeing a pullback actually at open, maybe coming here. I'm actually going to zoom in on the chart for this doodle so I can just do it a little bit nicer. And so what I could see is, if we gap up to around, $23, let's say, maybe we get a pullback to, let's see, I don't like how this thing comes back. So I just want to get it over to, let's see, this would be where that goes. And then maybe we come down to retest that 618 around 22. Maybe worst case scenario, come down to around 21 to test that 50-day moving average. and then get a wick up bounce, and then maybe get rejected from that 200-day moving average around 24 before starting to move up and find some resistance where those prior highs were, and then get up to fill that gap. And so that time frame is going to be kind of expanded from what I would be thinking would be happening here. And so actually, yeah, that's kind of just a very ugly doodle there. So yeah, I might what I'll do is I'm going to switch this over to the 1 hour time frame, so I have a little bit more, actually those, a little bit more wiggle room here with those doodles because I think it adjusts it to the candles. So let's see, maybe something like this during trading today. But then if we get, a close up, whether it's like this or, above, and then we could start to see this going higher into tomorrow. I think that would be a fine look. That also kind of coincidentally wasn't trying to do it. Puts in an inverse head and shoulders pattern there. And let's see, then this could continue higher. And then looking over to that at the daily time frame. So this is, let's see, for that doodle I can't put an arrow at the end of it. But yeah, I think that's something that we could see. So don't be surprised if we do pull back, like I have doodled over here. I think that would be totally fine. And this could be coming down to around $21 a share before bouncing and then switching over to the daily. I think that over the coming weeks, we could be filling this gap up here. And let's see that from, this gap up price. That would be a move of about 24% from where we're currently at. But if one is patient to buy the dip at 22, that's a 30% move to the upside. Or if that dip is to around 21, that is about a 35% move to the upside. So looking really good there. I'm super excited about this. Whether it's with the shares that I plan on holding, never selling those, or with the call that I'm probably going to sell at open just to take the risk off the table. I am pretty excited about that. And I should note that this was all on the news that Intel hired a new CEO. But now the hard part begins again. So let's see what happens with that. I am pretty excited about it. I hope you guys are too. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more content like this. Thanks a lot for watching. Take care, you guys.